I'm Emily Chang, and this is Bloomberg Technology. Coming up, Uber has a new number 2. Why CEO Dara Khosrowshahi tapped the head of Orbitz, former head of Orbitz, to join his team. Plus, Coinbase's insider trading suspicions, the investigation into a sudden spike in Bitcoin Cash just before it was officially introduced on one of America's most popular cryptocurrency exchanges. And one app to bind them all. Apple's 2018 plan for a custom application that works effectively on the iPhone, iPad, and the Mac. But first to our lead and a big Bloomberg scoop. Uber has a new number 2. The world's most valuable startup has named Barney Harford its chief operating officer. Harford, the former CEO of online travel site Orbitz, is the second high-profile hire by Uber CEO Dara Khosrowshahi. Harford has worked for and competed with Khosrowshahi in the online travel sector. And it's an interesting move considering the other Uber news out early Wednesday. The European Union's top court has officially ruled that the ride-hailing service should be regulated as a transport company, not a digital one. The ruling is aimed at Uber Pop, an inexpensive service in European cities that allows drivers without a taxi license to use their own cars to pick up passengers. Joining us now from London, Frederick Court, Felix Capital Managing Partner, and Bloomberg Tech's Eric Newcomer, who covers all things Uber and broke the story about the new COO. Let's start there. Who is Barney Harford, and why is he right for this job?
Well, he has a long history with Dara Khosrowshahi, so I think that's definitely helpful. This is sort of a loyalist that you can bring in, sort of a trusted hand. So I think that's part of it. Barney did a really good job at Orbitz. It was a debt-laden company. He was able to sort of get a good exit of $1.6 billion, selling it to Dara's Expedia. So, and then, you know, the experience at Orbitz and an Expedia marketplace businesses, which is super relevant to Uber. So it's relevant expertise. It's having a good relationship already with the CEO, and then he was doing this advisor role since October to sort of feel the company out a little bit.
Harford wrote a series of tweets after your story saying Uber already does more rides than the world's airlines combined flies passengers and provides flexible work opportunities to more people than any other company in the world. You know, what does the hire of a former airline industry expert imply about the direction that Dara wants to take this company?
Yeah, he's still on the United board and really understands that business. I mean, I think it shows the global reach and seriousness of the Uber's business as an employer, for one. I think, you know, his tweets speak to the amount that he thinks about Uber as this global employer that really has to take an obligation to how it treats its drivers. So I think that's going to be a top priority for him. And then, you know, the airline industry is sort of a parallel that Uber does not love because airlines have these huge expensive planes. But, you know, Barney also made the point to me that airlines are doing much better these days, are more profitable businesses, but certainly that expertise as a business model comparison, but then also sort of as a similar service industry is useful background to bring to Uber.
Now, I want to talk about this in the context of this news out of the EU that Uber will now be regulated as a transport company and not essentially a tech company, which is what they were hoping for. This is a big blow to Uber. What does this actually mean?
Well, yeah, it's bad for Uber because it means more regulation, means more sort of the potential that they could have to pay their drivers more, have more regulated rules around how they pay their drivers instead of being this sort of digital platform that's sort of super disconnected from the rules of local regulators. On the other hand, Uber's already regulated as a transportation company in London and Paris, two of its most profitable markets. So it's already started to deal with this, and Dara's stance has generally been, we're going to work with local regulators to sort of allow them to regulate us as they want. Obviously, we're going to have input. And so I think, you know, this is bad, and Uber's lobbied against it, but the company's already started to pivot to deal with what they saw coming.
Frederick, as a longtime investor in Europe, you know, what do you make of this decision, given the challenges that Uber is facing in London specifically, where you are?
No, it's interesting, and it's basically a confirmation that think local regulators in Europe, but I think it's the case also across the globe, are looking at these tech companies and saying, actually, we have rules, and you've got to operate within the context of those rules. So in the short term, it doesn't change too much for Uber, because Uber had to operate within those parameters, but it does cap the potential upside. Now, the peer-to-peer service that they were hoping to launch across multiple countries, and in certain countries Uber was planning to enter just with peer-to-peer, that will not be possible. So that restricts the opportunity. And it's an interesting time, because as a user, and I keep on hearing this anecdotally, the Uber experience for consumers has over the past 4 to 6 months been diluted. Harder to get cars, drivers canceling. It's almost as if the change of guard and change of management and maybe the release of the pressure has had an impact at the level of the customer experience. So I think bringing new management that will sort of tighten the grip on the business again is highly needed. And in the short term, Uber has got to focus on its core.
So what signal do you think this sends from European regulators about the gig economy in general? I mean, there's this talk that it could also be affecting a company like Airbnb, in that it may be, in the future regulated more like a hotel than a home rental site, as they would prefer.
Yeah, I think there is a sort of general move and realization across Europe that many of the tech companies that are global, that have launched very successfully services that have become dominant across Europe, have done that by pushing maybe the boundaries too much, and also importantly not sort of paying their fair share of taxes. So I think it's fair to expect a tightening of the grip, and also realization by the local authorities that they do need to create a sort of a leveling playing field for the local operators as well, and force certain rules, but also certain fiscal sort of discipline on top of those companies who've been able to use Ireland as a place to do some invoicing, and we see that changing with Facebook as well. So we expect, at least on our side, we see a kind of wave of change, and there is demand from consumers, from politicians, from the local services and businesses to say, hey, maybe we've been too open. When you look at China's been very good at sort of closing those doors, and maybe it's time for Europe to do a little bit of that as well.
So, Eric, we know Dara Khosrowshahi has been traveling a lot. He's been to London now. How do you think this ruling will impact his strategy?
Well, I mean, I think there's a lot of Europe that still needs to get figured out. And I mean, I think with hiring Barney, it's sort of a statement. Okay, internally, somebody else who's, as skilled as me needs to run the internal business, because there's so much to do outside. I mean, the situation in Southeast Asia, competing with Grab and Gojek is a live question, whether Uber will come to some sort of truce, merger, acquisition, what's going to happen there. Similarly in India. So all over the world, there are these questions, either strategic, dealing with competitors, or countries where the regulations still aren't figured out. And so I think he's very much going to be that public face, traveling around and either establishing themselves better in markets, cutting deals, or making an apology as necessary.
Interesting. All right, Eric Newcomer, who covers Uber for Bloomberg Technology, Frederick Court, Felix Capital managing partner with us from London. Frederick, thank you for stopping by. Now, on the earnings front, BlackBerry is raising expectations. It can hit its growth targets by the end of the fiscal year in March. The former smartphone maker won new software customers from government and the private sector in the third quarter. BlackBerry's revenue beat estimates, and out with earnings for the first time on Tuesday was Stitch Fix. And investors were not enthused. The data-driven online personal styling service had its biggest decline on Wednesday since becoming a public company. This after reporting that it's spending more money than analysts expected to expand into new apparel categories. Coming up, one of the most popular cryptocurrencies on the planet is facing its biggest controversy to date. Why Coinbase is investigating possible insider trading on its platform next. And Bloomberg Technology is live streaming on Twitter. You can check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. It's been a wild 24 hours at Coinbase. The platform is investigating allegations of insider trading in the hours before the company announced it would enable Bitcoin Cash. Meantime, the volatile crypto market is gaining the attention of global institutions. Here's what Bank of England Governor Mark Carney had to say about Bitcoin earlier in London.
It's increased significantly in value, but it's not connected to the core of the financial system in general. It's not levered, and orders of magnitude, it's less than the market cap, half the market cap of Apple. So it's significant, or if you add Bitcoin and some of the other major cryptocurrencies, it's in that order of magnitude. Significant, but it's more like an equity type risk that's spread fairly widely around the world.
To wrap up all the news in cryptocurrency, let's bring in our editor-at-large, Corey Johnson. So what is happening at Coinbase?
So this is the great fear of an unregulated market, which is that someone will take advantage of that to do something illegal, or maybe not illegal, just really deceptive, and take money from investors by taking the role as a market maker. It's a great fear for Coinbase, certainly, and a great fear for anyone involved in this trading, that the regulated trading that we're used to, that have investor protections built into it, and it had centuries of investor protections that have built up over time, are not extant in the world of trading in these cryptocurrencies, and that someone could have jumped in there ahead of trades and engaged in insider trading.
Right, and so the fear is that Coinbase employees are front-running?
Or someone, right? We know that Coinbase was being attacked by hackers. There were denial of service attacks across the industry. We don't know who could have gotten into their systems. We don't know how their systems work. We know that they're not regulated and they're not monitored. I don't like to use the word regulation because it has really bad connotations. I think anytime anyone uses the word regulation in any context, we can at least think that regulations exist, at least initially, as protections. And the investor protections and the market monitoring that happens across most trading world, certainly in the United States, doesn't happen with Bitcoin.
So Brian Armstrong, the CEO of Coinbase, said they won't hesitate to fire anyone.
Right.
There's been a lot of chatter about this. Connor Sen, a portfolio manager for New River Investments, who's also a Bloomberg View columnist, tweeted, "My own personal view is Coinbase is a zero over the next 3 years due to sketchy stuff that will take them down in a bust." That's strong.
It is strong, but this is the issue, right? I mean, this is when you make a market, a fair and orderly market is the principal guiding rule to creating a fair and orderly market and letting investors know they're going to get a fair and orderly market. No one's going to go to trade if they know that they can't go anywhere else, number one, and that they're going to get a bad price. The price they're getting is not going to be fair. That could destroy the business of Coinbase, and this kind of reputational issue is extraordinarily serious.
Now, interestingly, as you have more, novice investors getting into this, some of the alternative coins are becoming more and more popular, the cheapest coins, for example, things like Litecoin. Can you talk to us a little bit about the altcoin market?
Well, what we saw today is that across the board, all of these sold off. We saw Bitcoin decline by about 2.5%. We saw Ethereum, Ripple, Litecoin all down today, 1.5% to 2%. But the total size of these market capitalizations, as we just heard in that soundbite, are sort of mind-boggling. Interestingly, Ripple, and we're going to have the CEO of Ripple on, forward promote. Get ready to hold on to your seats. The CEO of Ripple is going to come on next week to talk about this. But see, the Ripple actually controls most of the Ripple currency, and they've decided as they build a real business around the currency and around the blockchain technology, they're going to sell off those pieces of Ripple in a sort of a regular fashion to kind of take that risk out of their business and let people know what's coming into the marketplace. But on some level, it seems to me that what Ripple's saying is we don't want to be in the business of holding on to coin. We want to be in the business of actually allowing this to be used in some interesting ways so business can transact on the Ripple network.
Meantime, North Korea is allegedly behind a big Bitcoin heist on a South Korea exchange. Tell us about that.
Well, it shows us that some of the leaders in the global criminal effort of hacking are focused on financial crime, number one, and focused on Bitcoin as a method to do so. What we know, what we've seen out of North Korea is as rudimentary as most of the technology and industry and power systems and everything else are in North Korea, they've had tremendous abilities when it comes to hacking. Let's remember, it was exactly this time of year, was it 3 years ago, when we saw the hacking of Sony, and we saw the release of all those emails on Sony that led to Sony executives getting fired. all about this film, this James Franco stoner film that made fun of the leader of North Korea. And yet that seemingly ridiculous incident led to big changes in Hollywood, but also showed us the power that North Korean hackers have had in the past. Those efforts have gotten only stronger as U.S. sanctions have gotten tougher on North Korea.
Right, and the U.S. has officially blamed North Korea for the WannaCry attack, which was one of the biggest hack attacks in history. Corey Johnson, our editor at large.
Thank you.
Thank you. Coming up, there is a big change coming to Apple's Mac and iOS users, how it's planning a one-stop shop for all your app needs next. And a feature I want to bring to your attention, our interactive TV function. Find it at the terminal, TV Go on the Bloomberg. Watch us live. If you miss an interview, you can go back to it. You can send our producers a message, play along with the charts that we show you on air. This is for Bloomberg subscribers only. Check it out at TV Go. Could Walmart be getting ready to ditch checkout lines and cashiers? Well, that could be the future for the superstore, according to a report from Recode. Store number 8, Walmart's startup arm, is aiming to reimagine the retail giant operating like Amazon's Go business, where you can pick up items and walk out with any cash physically changing hands. It all happens automatically. Walmart's new ambitions also include a personal shopping service for, quote, busy NYC moms who will supposedly be able to shop via text message. Tech watchers finally got a glimpse of one of the most long-awaited products. Secretive startup Magic Leap unveiled stills of its mixed reality headset. According to the photographs, the steampunk-esque goggles come with a controller and computing pack to wear around your waist. Magic Leap has long kept a tight lid on this handset, but is now facing increased competition from the likes of Google and Apple in the augmented reality realm. Bloomberg has previously reported the gear will cost between $1,500 and $2,000. And Apple is planning a move to give its users a single set of apps across all of its devices. Bloomberg has learned that the Cupertino giant will ditch having different apps for iOS and Mac OS operating systems. This means that now one single app will work with a touchscreen or a mouse and trackpad, depending on what device is being used. For more, I want to bring in who else but Bloomberg's Mark Gurman, who broke the news of this shift in Apple's ecosphere. So what exactly does this mean?
It means that developers are going to want to write more apps. They're going to make more money from apps because they'll be able to sell more of them. The Mac App Store thus far has been a ghost town. This is going to change that. And it means consumers will only have to buy one set of apps. So you have a single app, and no matter what Apple major device you have, whether it's a laptop, a desktop, an iPhone, or an iPad, the app will just work.
And how will it actually work, essentially?
So you'll be able to download one application, and theoretically it'll automatically download and sync to all your devices. And let's say you run it on an iPhone, it'll work with the touchscreen. Run on an iPad, it'll be the bigger touchscreen. The same exact app, it's called a binary, will run on the Mac, and it will just be expanded and work with the trackpad, keyboard, and mouse instead of the touchscreen, because Macs don't have touchscreens.
Does it imply that Macs may have touchscreens in the future?
Yeah, I think it does. I think it implies that this is part of a long-term initiative of Apple trying to make Macs more like iPhones and iPads. And obviously a touchscreen would be part of that. Will that happen in the very near future? I don't think so, but it's definitely a stepping stone towards something like that happening later on.
Apple wasn't the first to do this.
No,
right?
They were not. So two of the other big players, Google and Microsoft, have sort of dipped their toes in the waters of combining desktop and mobile applications. Microsoft had a system for this when they had Windows Phone software. You can write an app for the phone, also work on the computer. Google, with the new Pixel Book, you can actually download Android apps. So like I have a Pixel Book, I have Instagram, Snapchat, all those apps on it. So it's pretty integrated, but Apple's approach is going to be slightly different because it's going to be one type of app that expands to a different interface depending on the device you're using it on.
So curious about your thoughts on these Magic Leap goggles now that we've seen them.
Yeah,
haven't used them.
Haven't used them.
But seen them.
Hopefully we can use them one day, but it's going to be expensive, as we reported, between $1,500 and $2,500. They're big and bulky, and then you saw that little like puck that you have to put in your pocket, connects with a wire to you. That seems pretty involved. That seems like a lot. I'm not sure most people are going to want to wear that. And it's a mixed reality headset, which is basically AR. So it loops the real world and the virtual world together. the concept of AR really is enticing for a headset, lightweight glasses that you would want to walk around town with. You want glasses with AR so I could walk around the office, say hi to you, and see you, but other things. But how weird would it be if I walked up to you with that big thing to try to talk to you? So I think we're there in terms of concept, but I think it's really too early, and I think Google and Apple and Amazon in the future will set the stage for real AR that people are going to want to use.
This is a company that's raised $1.9 billion already, and they're walking into a fairly competitive market that, however, there hasn't been a breakout glasses success, right?
Yeah. Good luck to their investors, is what I have to say. We'll see how it plays out, but they've really just been, hyping up nothing until now, and now they're saying they're going to have a headset soon, but it's still just concept photos. It's a little odd. It seems a little suspicious, but we'll see. We'll see.
All right, we'll wait for your review. Mark Gurman, our Bloomberg Tech reporter, thanks so much. Coming up, more on Uber's new COO, how Dara Khosrowshahi's right-hand man could help turn the company around. Next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang. Back to the top tech story of the day. Uber has tapped into the travel industry yet again, naming former Orbit CEO Barney Harford as its new COO. Harford will oversee global ride-hailing operations, marketing, customer support, and the company's food delivery business. More importantly, Harford will serve as Dara Khosrowshahi's right-hand man. This news comes the same day as the ride-sharing company took a major hit in the EU. The EU Court of Justice officially ruling Uber a transport company after the bloc's top court rejected its claim to be a digital service provider. For more, we're joined by Bloomberg Tech's Tom Giles. So, what's your take on this? Is this just about needing another grown-up in the room? Is this about, his background in the travel industry and, the future of Uber as a travel company?
This is someone that Dara Khosrowshahi knows well. He worked for him. There was a transaction of companies between them. This is someone who's competed against Dara Khosrowshahi. This is someone he has a lot of trust in. And when Dara's away, as we saw was the case, for example, when Dara was in London dealing with London regulators at a time when they were, in crucial negotiations with SoftBank over SoftBank's investment. The guy can't be in two places at once. He's got these fires around the world, as we saw with the EU decision just today. Can't be at two places at once. Needs an extra pair of hands, and he needs it to be someone he trusts. I don't buy the needs another adult in the room argument. This isn't a case of Mark Zuckerberg, Sheryl Sandberg. Khosrowshahi is an adult. He's been around the block. He's run a major global corporation. This is about needing an extra pair of hands to really get the job done and run operations when Dara Khosrowshahi is around the world waving the flag.
What about the cultural issues that Uber is fighting at home? I mean, dealing with, an exodus of executives, an exodus of talent, low morale after the year that Uber has had.
Right. It's been a terrible year for Uber. We know that very, very well. They need stability. They need someone at the helm. And when Dara's overseas, when he's in Brazil, when he's in London, they need to know that the person at home is a trusted right-hand person. And it looks like this is what the role of the new CEO is going to be. What
do you think this means for, the competition lift, for example? We know that market share has been increasing, especially in the Bay Area. And now, Uber is moving towards having more of its ducks in a row, even as new skeletons continue to come out of the closet.
I mean, the way I look at this is Uber needs stability. Uber needs to get its house in order as quickly as possible before Lyft gains more share, before more people go to Lyft. I mean, if you're an employee and you're thinking about going to a ride-hailing company, do you go to Uber, where there's been this much turmoil, where you're getting crackdowns in the EU, where you get the London regulators coming down on you, where the CEO just left 6 months ago, or do you go to Lyft? So that's one area of stability. If you're a consumer, do you want to go somewhere? Do you download Lyft or do you download Uber? A lot of people are asking these questions more and more than they ever have before. So anything Uber can do to bring stability, the better.
How big a blow do you think this EU situation is?
In Europe, it's a big deal. It really limits their ability to maneuver there. It means that Uber popped this thing where unlicensed drivers, which is what we all use here
it's
in the US
Uber X,
all the time, you just can't do. Now, they had already been putting limits on Uber Pop in many European cities. This just means that it's that much more limited. And so the kinds of drivers that Uber has to bring in, they have to be licensed. They have to be these people who are, go through extra training and probably have to be paid more. So it definitely ties Uber's hands. And remember, there are no appeals here. So, I mean, to me, it's a setback in Europe.
Okay. Tom Giles, our executive editor of Tech. Thank you for weighing in. Meantime, out of Washington, the biggest piece of tax legislation in the last 30 years was passed through Congress. Here is what President Trump had to say earlier from the White House.
We are going to bring at least $4 trillion back into this country, money that was frozen overseas and in parts and worlds, and some of them don't even like us, and they had the money. Well, they're not going to have the money long.
The debate over tax reform has been raging for weeks and could have major impacts across industries, including technology. We're joined by our Bloomberg tax reporter, Laura Davison, in Washington. Laura, it's been a very exciting few weeks for you. Obviously, we know that the effective corporate tax rate has been brought down. We know that this will impact cash overseas. How will this impact the biggest tech corporations that have a giant pile of cash overseas?
Yes. So there's, Trump said about $4 trillion. Other estimates say closer to $3 trillion. But anyways, it's a large number of dollars that tech companies and pharma companies have stashed overseas. And really that's because the tax laws would get hit with really high tax rates to bring it back. So people have just been storing it there. Now, at a lower rate at 15.5%. So if they would have brought money back last year, it would have been 35%. Next year, it would be 15.5%. They can bring that money back. And what Republicans say they hope that companies do is to reinvest in their facilities, in research and development, hire more workers, pay the workers that they have more. We'll see if that's how it pans out. The last time there was a repatriation tax holiday, what happened is there ended up being more stock buybacks or dividend payouts or more executive compensation. But that at least is the hope. And tech companies are very excited to be able to have more free access to that cash now.
Comcast just announced they're going to be giving a special $1,000 bonus to over 100,000 employees. What does that signify in terms of how companies are responding or will respond to the lower rate?
This really shows, this is really the poster child example. Republicans couldn't ask for a better headline today as this bill was passing, saying, look, companies are going to take this tax, the tax cut that they have and give it to their workers, push that money out into the economy to help it grow. They have really, really ambitious goals out there to have the economy grow, 3 or 4% a year. And this is an example of that happening. We'll see if there's some others down the line. And if so, that could really help the popularity for this bill, which it's not a popular bill right now. Less than 50% of people, in recent polls have said they approve of it.
Obviously, there's been a lot of interest in Bitcoin over the last several months, and there is a provision in this bill that would increase tax liabilities for investors looking to trade in cryptocurrency. What is the impact of that?
So I have a little bit of bad news here in that there was a great tax rate for Bitcoin, and now it's no longer there. So essentially, it was this little section of the tax code, section 1031, called a like-kind exchange. And it was used for farms, for ranches, for real estate, for art investments. And basically what you could do is you could buy a bigger ranch, buy a different set of cryptocurrency, buy a more expensive work of art, and you could defer the tax on that. So you could keep upgrading and upgrading and upgrading and keep passing that tax bill down the line. However, the tax bill limits that, so it's just for real estate. Can't use it for any other sort of fun asset anymore.
Won't be able to get my bigger ranch now. Darn it. Laura Davison, our Bloomberg tax reporter in Washington. Thanks so much, Laura. Coming up, Netflix is betting couch potatoes will want to stay home for the next movie blockbuster. We'll have all the details next. This is Bloomberg.
What's my face? You and it's a lot more kind of love.
A story we are watching, Disney will weigh in on the AT&T Time Warner merger lawsuit. The judge for the case will hold a status conference call Thursday. The latest court filings don't detail Disney's position on the case, however. You'll remember that last week Disney announced it will acquire assets from 21st Century Fox. That merger could face regulatory scrutiny. Well, Netflix's latest film is a big-budget Hollywood-style blockbuster. Bright, starring Will Smith, will start streaming on Friday and be available only on Netflix. The release is seen as a push to upend the movie business like it did to television with bingeable episodes of original content. And Netflix already has a sequel in the works. Joining us now from LA, Bloomberg's Lucas Shaw, who covers entertainment for us. Lucas, this is music to my ears as a mom who never gets to go out and see movies. What is Netflix's strategy here?
Well, it is to satisfy someone like yourself. You know, for as much as the TV business has changed over the past few years as a result of Netflix, the movie business has stuck to its modern pretty stubbornly. You know, if you want to watch one of the big movies coming out in any given weekend, if you want to watch Star Wars, if you want to watch the new rock movie Jumanji, you have to go to the theater to see it. There are some movies that are available at home, but they tend to be smaller budgets. And they're still in theaters at the same time. Netflix is saying, hey, if you want to watch a movie with Will Smith, who's been one of the biggest movie stars of the last 20, 25 years, you can do so from your couch. It's going to look every bit as good as it would in the theater, and you can get the same experience.
Is there any data or prediction of just how many people will actually do this versus going to theaters?
You know, there's no data for how many people are going to watch Will Smith's movie the first weekend. We have started to get some preliminary data from Nielsen about viewership of a couple of the really big Netflix shows like The Crown and Stranger Things. It's a little bit harder to measure with a movie, but one of the reasons that movie theaters are so opposed to this, and some movie studios are scared of Netflix, is that you've seen a gradual decline over the past 10 years in the amount of time or the number of times in any given year that people go to the theater. And one of the reasons cited for people staying at home instead is because they can watch something on Netflix that's every bit as satisfying as what they'd need to see in a movie theater.
So what is the data about The Crown and Stranger Things? What is that showing?
The Stranger Things data shows that was watched by, I want to say, the first episode over the first weekend was watched by like 10, 11, 12 million people. That's as much as the most watched show on cable like The Walking Dead. The Crown was more like 3 million people, which is, you know, a sizable audience, but not gigantic. But the thing to keep in mind is that Nielsen is only measuring in the US. More than half of Netflix's audience is global. And Nielsen is only measuring on certain devices. Like, I don't think mobile phones are included.
So, you know, how is Netflix's strategy playing out vis-a-vis Amazon Studios, especially given the tumult at Amazon Studios, Roy Price leaving over sexual harassment allegations, as well as the star of Transparent, and, you know, Amazon Studios not really having a huge hit right now?
You know, in terms of original programming on the TV side, Netflix has been a lot more successful than Amazon, really more successful than anybody else out there in the streaming landscape. On the movie side, Amazon was really the first one to have a lot of success. You know, they won some Oscars at the most recent award show. They were making these critically acclaimed movies, and earlier this year they were involved in The Big Sick. Which garnered a lot of acclaim. But this is we're seeing maybe a shift. Netflix has Mudbound out right now that is likely to pick up some awards nominations. And Bright, though I'm not sure how critics are going to feel about it, and I'm personally not allowed to review it at the moment, is not, we'll just say, is probably not going to be the biggest movie of the holiday season. But they don't need it to be. They just want it to be something that if you're sitting at home and you have nothing better to do and you're with your family and you like Will Smith, you're going to sit there, you'll watch 30 minutes of it, you'll watch an hour of it, maybe you'll watch an hour and a half. But there are going to be more and more of these. They just earlier this year hired a guy who, starting later next year and after that, is going to be producing a lot more big budget movies.
All right, Lucas Shaw for us there, our Bloomberg entertainment reporter. Thank you. I now have my menu for the weekend. All right, coming up, the man who led Microsoft and Google's efforts in China, Kai-Fu Lee, CEO of Sinovation Ventures, breaks down the challenges facing U.S. tech companies trying to break into China. This is Bloomberg. Google is deepening its push into China as it seeks an edge in one of tech's most competitive fields, artificial intelligence. The company opened a new Beijing research facility last week, but the road ahead for Silicon Valley tech giants is still rocky. I spoke with Kai-Fu Lee, CEO of Sinovation Ventures and former Google and Microsoft exec who led those companies' efforts in China on this week's episode of Bloomberg Studio 1.0 about the road ahead for U.S. tech companies in China.
When I joined Google and went to China, we had made a decision we would comply by government laws. And that allowed us to grow a business from about 9% market share to 24%, and growing search revenue from nothing to almost $1 billion. So I thought we were given space to do our business. But ultimately, I think the legal restrictions and Google's values really didn't allow Google to continue to operate. And
YouTube getting shut down was really sort of the beginning of a series of shutdowns. Facebook was blocked. Twitter was blocked.
None of these companies would have had any chance of succeeding in China because I think American companies were just too far removed from the Chinese users' needs. Google eventually agreed to create a Chinese interface, but that would get in such a way of the Silicon Valley-centric way of the world where one platform would serve the world. And that egocentricity would have caused every American company to fail in China. Also, if you look at the new companies that rose up in China in a very tough competitive environment, I think WeChat is clearly a better product than Facebook Messenger. I think Taobao Tmall is a better product, certainly than eBay, if not than Amazon. The Chinese payment system, fully connected, frictionless micropayment, peer-to-peer, is clearly better than PayPal and the credit cards. Many people compare it with gladiators in the Colosseum. And I'm afraid the Silicon Valley companies were just no gladiators. They'd get killed in China.
You left Google in 2009. Google left China a few months later.
Yeah.
What happened?
Well, I had no idea. I was surprised. New York Times called me one morning and said, Kai-Fu, what's going on? Can we get a quote from you? And I said, what? They said, Google just left China. And I said, I had no idea. I can't give you a quote. So then I read about it on the news just as you did.
Google said they didn't want to respond to the censorship demands of the Chinese government. Was that the right call?
It's hard to say what's right or wrong. I think if Google is a very value-centric company, so it will do things according to its values, for which I think we all respect. But on the other hand, that makes it impossible for the company to do business in China. And I would prefer to see engagement. And engagement would give users more choices, and that would ultimately, I think, lead to competitiveness and better products. But that, of course, required following the law, and if you choose not to, then I guess you would have to exit.
Do you think Google will ever return to China?
I think it's very difficult. It's hard to say ever, but the core products cannot return unless they follow the laws and regulations. I do think some secondary products, Facebook's Oculus is launching in China. I think some of Google's new products that are maybe not as core could potentially be launched as an experiment. I think Google is a great company, and I would like to see them launch products everywhere.
Facebook has been making overtures, shaking the right hands, and yet we saw Facebook's WhatsApp recently blocked. Instagram and Facebook are still blocked. Do you see a scenario where Facebook can have a substantial presence there?
If I were Mark, I would definitely launch Oculus. I would work hard in getting more Chinese companies to see Facebook as a platform for ads so that Chinese companies can project positive images worldwide. I would consider, if I were either Google or Facebook, launching the open source AI projects in China. China wants to be the world leader in AI, so there is a case where the interests are aligned. So it's always better to start in an area where the interests are aligned rather than go into an area where there's conflicting values.
What do you make of Tencent's investment in Snap, buying a 12% stake? Is this the beginning of bigger U.S. ambitions?
I think Tencent's very smart about making global investments. I think they teach a lot to the companies they invest in. I've spoken to Evan, and he really appreciates all that Tencent's taught them based on Chinese users' behaviors, social, and things like that. But I also think Evan has taught Tencent through its experiences. So Tencent's just this very powerful and amazing learning machine. So these investments are teaching what they know, just like Tencent and Facebook were connected by Yuri Milner, right? So there's learning going both ways. So I think Tencent, I don't think they have global domination ambitions. I think they're primarily a Chinese company, but they want to continue to increase their presence and learn and teach at the same time.
That was Kai-Fu Lee, CEO of Sinovation Ventures. And be sure to tune into the full episode of Bloomberg Studio 1.0 tonight, 9:30 p.m. Eastern Time. And that does it for this edition of Bloomberg Technology. A reminder, we are live streaming on Twitter. Check us out at Technology weekdays at 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.